Hi, this is Glenn Ingram again, your ADA website accessibility specialist. Today I'd like to visit with Tom Teraoka. Tom is the founder and owner of Teraoka and Company Accounting and CPAs in Huntington Beach. They've been working in Huntington Beach for over 35 years, providing personal and business tax services, as well as tax preparation and tax consulting. Tom, thanks for joining us today. How are you?
Oh, thank you, Glenn. I'm very good. Thank you. A little raspy voice this morning, but other than that, I'm doing okay.
Sounds good. Sounds good. Well, I'd like to kind of pick your brain for a little bit, if we could, about this tax credit for the Americans with Disability Act and for businesses when they do edits to their business for that. Can you explain that a little bit for us?
Okay, well, in summary, the tax credit is a credit for whenever you're trying to comply with the ADA or the American Disabilities Act. If you incur expenses, you can take a credit for those expenses that you incur up to 50% of the amount that you incur. So for example, if you incurred $10,000 of expense, you're entitled to a 50% credit against your personal or corporate income tax. And there are certain rules and regulations that sort of limit this. One of them is that you have to be a small business in order to qualify for this disability access credit. And the rule of or definition of a small business is one in which the business has 1 million in sales or less, or 30 or fewer employees. And so this becomes a limiting factor for the small business sector. However, I think that a lot of the small businesses that encounter compliance with the ADA and what they have to do, they'll sort of fall within this range. And I think it'll be the majority of the businesses that will fall within this range. However, obviously the larger businesses have definitely compliance issues in the same regard. However, they're not available to take this tax credit.
So now, how does that reduce the cost for the company? Can you explain a little bit more, like maybe the difference between a tax credit and a tax deduction?
Okay. The tax credit, the way it works is that you get a 50% for any expense that you pay. You could take a 50% credit against your income tax. So if you, that's maybe the best way to explain this is by example. Let's say you have a situation where you decide that you've got to come in compliance. You've got to do some repair work within your, maybe your bathrooms to make them compatible, or make it so that a person of disability can access your restroom. So let's say you hire a contractor to do this, and it costs you, let's say, $8,250 to install this change. Now, in incurring that money, you're going to lay out $8,250 to the contractor upon completion of the work. And then on your income tax return, you'll be eligible to take a credit of 50% of that amount. So 50% of the $8,250 would be basically, well, let me just back up a second. On the first 250% of expense that you incur, you don't get any kind of credit. So if the total bill is $8,250, you get only 50% of the 8,000, which is, in this case here, would be 4,000. So you would get to reduce your income tax by $4,000. This $4,000 credit is probably equivalent to maybe more like a $25,000 deduction on your tax return. So you're really saving a lot of money, and it's really only costing you now, instead of costing you $8,000 to make the improvement to be in compliance with the ADA, it's only costing you half as much.
Well, that's a pretty good amount for a business, we all seem to owe money at the end of the year. So if it reduces how much money we owe, that's pretty significant.
Yeah, oh, definitely. Yeah, now you can do this every year, assuming you have certain things that you have to come in compliance with. You might want to spread it out between 2 or 3 years so that you can take this credit every year that you incur this expense.
Now, let's say we do have a full $5,000 credit, but we only owe $3,000 this year. Can that credit carry over from one year to the next?
Yes, you can carry this credit. This is what they call a general business credit. And at the present time, the law allows you to carry forward that unused credit for up to a period of 20 years. So within that 20-year period, hopefully you're making some income and you have to pay some taxes, so you'll be able to offset the income tax at that point. There is also a provision if you do have a credit, let's say calculated, you have an opportunity to also carry that back into one prior year to recoup tax you may have paid in the prior year. So you have 2 different options there to get your full benefit of the tax credit immediately.
It seems like there may be several different types of tax credits out there that small businesses aren't taking advantage of.
Oh, definitely. I mean, if you look in the tax code, there must be at least 100 different credits. I mean, another credit that comes along with the ADA Act is they set up a targeted jobs credit, which allows a business owner, if they hire certain categories of individuals that have disability, they can get a credit up to $2,400 for basically 40% of the first $6,000 that's spent by an employer. There's different credits, and I hate to kind of go into them right now. So.
Well, I understand, Tom. You know what? I thank you a lot. I appreciate this. I think this is going to help some small business owners understand that even though they have some expenses that they have to incur because of the Americans with Disabilities Act, at least they can get some credits back at the end of the year and help them pay for some of these expenses.
Right. No, I definitely agree. I mean, the tax credits are, it's a dollar for dollar offset against the income tax, so it's quite a benefit to, and also help you stay in compliance with the new the existing ADA Act.
All right, Tom. Well, thank you a lot for joining us. I really appreciate this. I'm sure that the small business owners will appreciate your advice.
Okay, thank you, Glenn. You have a good day.
You too. Bye-bye.